Hey there traders, thanks for joining me for this video as we take another look at the indices heading into a brand new week of trading. It's always important to take a look at where we currently stand, how the price action's been, what are some key levels that we need to keep on the radar, because that's going to influence how individual stocks move. Now last week you may or may not have noticed there's a new book that came out. It's called Traders at Work, and I'm really proud and honored to be a part of this book. I actually was chapter 10 in this book, and so if you're looking for some trader material, this is an interview style book with a lot of well-known traders, and I was honored to be included among them. So pick up a copy of that. It's excellent. I've got some details on that right there on the homepage of thestockbandit.com if you're interested. Taking a look at the indices here, though, we had a holiday shortened week. Market was closed on Monday for Martin Luther King holiday, and so we did go 3 for 4 in the NASDAQ and the Russell. The Dow and the S&P both went 4 for 4. So it was an impressive week by that measure. Blue chips still continued to outperform the NASDAQ. The Russell is still leading the way for everything. So here's where we currently stand. For the NASDAQ, we've got this high from last week, 3161. Just a short distance above that is this first lower high from October, and then of course the 52-week high right up here where this longer lateral line is. That's at 3196. So we're not a long way from there, but we've just been making really gradual progress here over the past few weeks. Part of that's been attributed to Apple, and you no doubt saw where Apple just got beaten up bad on Thursday and into Friday after reporting earnings Wednesday night. It closed at 514 and then finished the week at 439. So a serious haircut there for Apple, but it's a heavyweight in the NASDAQ, and that's obviously kind of dragging this index down, but at the same time this index is still not quite yet threatening a breakout, so something that we'll need to continue to watch in the days ahead. For the S&P 500, this index not only pushed through that 1474 recently, but every day since then it's been adding to that, which gives it a little bit of room between current levels and where that breakout level is. So now there's some potential here to pull back and still hold above that area. So we'll see if and when that does take place, how deep a pullback happens to be. We're now through the 1500 level, and now you've got to really zoom out all the way to a weekly chart and zoom out and see this high from October of 2007. I believe that was on Halloween that we saw the all-time high set for the S&P. That was up here at 1576. So we're now approaching that. We're what, 5% from there, give or take, as of Friday's close. So we are still in very good shape here, but we are getting a little bit stretched here. This rally right here off of this 1394 area that I had highlighted a number of times, that's the New Year's Eve and then the January 2nd liftoff that we saw. And since then, we've seen a really big lift here for the S&P. That represents about a 7% rally. So that's a significant move in terms of the S&P 500. This is not really a momentum type of index, but it has definitely made a momentum type of move. So we'll need to see how that gets treated in the days ahead. For the Russell 2000, this is the small cap index. And as you take a look back here to this November low, this thing, well, let me just first things first. From the December 28th low, this test right here of this 833 area, which has been a big level that I've highlighted here a number of times, we pulled back into that in late December, and then of course New Year's Eve we lifted from there. January 2nd we continued higher, and since then we've seen this index make an 8.8% move. That's a tremendous rally for the small caps, but even bigger is the lift from here. This November low, that is 18.6%. So we're talking about a huge rally here in small caps, and that just shows a big appetite for risk. Now at this stage, this index is getting a little bit stretched. It's really just kind of a one-way street here, and at some point we will see some profit taking kick in. The levels that I would really keep a close eye on are this 883 that it had most recently broken out through, and then this 52-week high that it had cleared back here at 868. So those are kind of downside levels to watch if and when we see some profit taking kick in. But for now, it's pushing 905, which is quite an achievement for this index. And then finally, you've got the Dow, which broke through this 13,661 level. That was the 52-week high that had been in place since October the 5th. So we had some well-defined resistance there. We punched through that and continued higher last week, going out at 13,895. So this index, here again, you've got to zoom out, go to the weekly chart, and then zoom out a bit. And you've got this high right here, 14,198. Again, from October of 2007, that's the all-time high here for the Dow, 14,198. So we're certainly approaching that. We're now, what is that, 300 points, 303 points from all-time highs here for the Dow. That's very impressive, no doubt. But at this stage, it's also starting to get a little bit stretched, and therefore we need to just kind of be on guard for the potential for a pullback for this index. If I can shift back over this daily chart, there we go. But this lift right here off this 13.3 area has been nonstop. We've been up every day but one day, and on that one day we saw this index give up only 23 points. Now this is the senior index. It's only 30 stocks, but it's the one that Main Street is so familiar with. So I think we need to be very cautious here. Now a couple things I did want to point out here about the Dow. This June low right here into this high right here in September, that represents a 12% move, okay? Just to kind of put things into perspective. This rally that we've seen now from November into the January high, where we currently sit, is 11%. So, if history is our guide, in the market does oftentimes tend to mimic prior moves. This is something we need to pay attention to here. It's not to say that we can't go higher or that we won't go higher, simply that the last move was about this size of a move. So time to be watching for some signs of fatigue to set in, and when you start seeing the market kind of making this parabolic type of move, that's an indication there to definitely just exercise a little bit more caution. Look to book some profits, tighten those stops, and of course stay selected. If you're looking for some trade ideas to add to your own, we'd love to help you out. We provide those on a daily basis right here at thestockbandit.com. Check out the free trial. We'd love to work with you. Other than that, thanks for joining me for this video. I will have more for you soon, but until then, trade like a bandit.